Hey there, everybody. Tom's with Basecamp Trading. It is Monday, February 5th, a day that's probably going to go down in history here because the way the market's moved, we have the stock market just fell through the floor today. The S&P down from S&P futures down from a high of around 27.65 all the way down to 26 or 25.95. So a huge move there. Dow went limit down, I believe. They said it's biggest down day the SPY's ever had. So that being said, I want to talk to you a little bit about what happened in bonds, because bonds are negatively correlated to the stock market. When money comes out of the stock market, it goes into something safer. So when you have big sell-offs in the market, typically you're going to get a inverse move in the bond market. And you can see this is a 500 tick chart of 30-year bonds, and they rallied 4 points from the low to the high, which is a huge move in bonds. But the one thing I want you to see here is this little portion right there, because in a matter of about 5 minutes, bonds rallied 2 points. Okay, and you can see what it looks like on a tick chart. It just jumped and ripped right through the roof. All right, now why is this significant and why is this important and why am I talking about this? Because when you see a market go parabolic like this, where it just rips straight up or straight down, don't be trying to pick a top and sell it, because you don't know where it's going to stop. You don't want to just blindly sell it on the way up. Wait until it rolls over. And once it rolls over, you can trade the retracement. And a lot of times, the faster a market rallies, the faster and sharper that retracement is going to be. And you can see here, we went from a high in bonds of 47.16, put all the way back down to 46.1. So a $1,500 contract retracement in bonds in a matter of just a few minutes after that 5-minute rally. Now, you don't want to use this, you don't want to do this type of trade in any market just on a little bounce. It needs to be a parabolic move. The market needs to do something very abnormal, like what we did here. And you can see what you want to do when you're trading it. You don't want to just sell it as it's climbing. Wait until it breaks the previous 1 or 2 bars lows, and then sell it, and it should accelerate through the floor, and you just trail your stop right behind it. Okay? Just like you did here. So as soon as it breaks the low of the past 2 price bars, you're selling, trailing your stop down. You can take out a very quick scalp in a matter of a couple of seconds and pull out several $100s per contract. And if you're in a spread trade, for example, you can leg out of a spread. A lot of times you cover your longs and then let the short side stay on and pull back down as well. Okay, so keep an eye on this. Pay attention when markets go parabolic. Now, the other thing I want to point out here, other than that, is the stock market. Okay, yes, the stock market went through the roof today, or not through the roof, through the floor today. Bonds went through the roof, but stock market went through the floor today. And I want to point out something, because what happens here is a lot of times people will go, oh goodness, it's falling to the floor, and they're all going to start selling right here. Now, pay attention to what happens during any other correction we've ever had in the market. The market very rarely will just go straight down from being up. Okay, so here's back last recession we had. You can see S&P, it had nice big sell-off, then correction, and then just trended lower. And it's just trended lower for a couple of years. And you go back and you look at 2000 before that, same thing. It rallies, big correction, it bounces, rebounds, and then starts selling off and trending lower. So why am I telling you that? Because pay attention to how a market moves, because we don't want to just be blindly selling down here. Wait for it to correct a little bit. You can get a much better entry. I don't expect it to just go straight through the floor and fall off the side of the earth and never look back. Normally it's going to bounce if you're going to get a major corrective move in the market where you go into a nice big bear market. So that's it for now. I will see you in the trading room bright and early tomorrow morning. Great job to everybody in the room that took the trades that worked out really well today in bonds. But that's it for now. And until next time, happy trading, everyone.